Late last Thursday, on September 1st, in a filing with the SEC, semiconductor maker Nvidia disclosed that the US government told the company on August 26th about a new license requirement for future exports to China. This includes exports to and from Hong Kong. The rule's rationale was to reduce the risk that Nvidia's products may be used by the Chinese military. I'm Chris Parrish, Chief Investment Officer with Oak Harvest Financial Group, and this is our investment team's midweek release, when we examine a news item, headline, or story making the rounds from publicly available sources, and we ask, is it news or is it noise for your money? This week, we cover the Biden administration's move telling Nvidia to stop selling its most advanced chips to China and Russia. This is news for Nvidia and most other semiconductor names. Nvidia said the restrictions would affect its A100 and H100 products. These are their most advanced graphics processing chips sold to businesses. Nvidia also said it could lose $400 million in potential sales to China in the third quarter. Recall that Nvidia, like many other semiconductor companies, had already guided down their second half outlooks due to a slowing global economy and higher inventory in the channel. The government's new rule also applies to sales to Russia, but Nvidia said it doesn't have any paying customers there right now. Recall that under President Trump, the US government started to increase export restrictions on chips made with US technology. More specifically, back then, the intelligence community was concerned largely about telco equipment maker Huawei. They feared that Chinese companies could use our advanced semiconductors for military purposes or to steal trade secrets. China currently makes up almost 25% of Nvidia's sales. On last Thursday, Nvidia's stock, which was already down almost 50% off its 2021 highs, fell by another 11%. This is even though they said they had already applied for and been granted a waiver for US export customers through March of 2023, as well as the ability to export out of their Hong Kong center through September of next year. In addition to Nvidia, another semiconductor leader, AMD, Advanced Micro Devices, said it also received new licensing requirements from the US Department of Commerce for new artificial intelligence chips. Having a smaller footprint in China in the space, AMD said it didn't believe the new requirement would cause a material impact to its business. Viewers, this is news. Unfortunately, bad news short-term for semiconductor companies such as AMD and Nvidia. Anything like this, government intervention or increased regulation that constrain future market growth, has an immediate impact of removing possible future revenue from a company's total addressable market, also known as TAM in the finance circles. For high-growth stocks like Nvidia and AMD, whose valuations are tied to structurally faster growth, the valuation hit is almost immediate and it's very severe. Hence, the immediate and almost instantaneous minus 11% drop in Nvidia and minus 7% drop in AMD on Thursday. At Oak Harvest, we think our clients are best served by us helping them plan for their future needs instead of focusing on the past. The future is always uncertain, and that's why our advisors and retirement planning teams plan for your retirement needs first and your greed second. Give us a call here to speak to an advisor and let us help you craft a financial plan that helps you meet your retirement goals. Call us here in Houston at 877-896-0040 and schedule an advisor consultation. We're here to help you on your financial journey into and through your retirement years. I'm Chris Parrish, and from the whole team here at Oak Harvest, have a blessed week.